Hello and welcome to Crux Investor. We caught up with Gavin Lock here today, MD at Arafura Resources on the ASX. They're hoping to produce NdPr oxides for the European ecosystem. Big barrier to that being a $1 billion capex. How's he going to fund it? When's he going to fund it? We talk through his solutions and options on the table. If you want our thoughts and opinions on that conversation, you can find them at cruxinvestor.com/club, where you can also find detailed company reports and analysis. We've got training courses on there to help you with your diligence process. We've got commentaries from experts from around the world on a variety of companies and commodities, and especially around the EV thematic, actually. Plus, we've got a thriving community of investors sharing their thoughts and ideas with each other in a nice, friendly and safe environment, free from judgment, trolling and abuse. And if you think that sounds nice, and I hope you do, go and join them. You can do that at cruxinvestor.com/club. And we'd love your feedback too. So give us a like, it'd be appreciated. If your thoughts below, get back to everyone. And if you want to see precisely what we talked about today, do take a look in the description below. Gavin, how are you, sir?
I'm really well. Thanks again for having me.
Well, yes, November we spoke to you. I think you were just a small 120 million market cap company. Now you're up at 200. It's been a good time for shareholders.
It has been, and just to recap on what we are, we're the next producer of neodymium praseodymium oxide, or rare earths, more collectively known, that's ready to go. So we're full steam ahead, and as you said, our market cap has grown significantly in the last little while, and I think it's reflective of really market sentiment.
Yeah, it is, isn't it? But have you been doing anything to contribute towards these gains, or was it just the market doing the heavy lifting for you?
Look, I think there's a number of things at play. There's a lot of geopolitical issues going on at the moment in terms of COVID recovery and how economies can see themselves recovering from it, and they're really focused on e-mobility and renewables. And certainly our product, the NdPr oxide that feeds the magnets that go into electric vehicles and wind turbines, is critical in that recovery. So I think there's a growing awareness of the looming shortfalls in supply and quality assets that are out there. We're also seeing a reflection not just in our share price, but also of the commodity price. And I think that again is being driven by EV demand. And even though we've been living through the last year of COVID, electric vehicle sales were up on a percentage basis exponentially in Europe, and so that I think augurs really, really well for our space.
Well, I was about to say we're seeing a lot of that ourselves with regards to we do a weekly nickel show, for instance. So in terms of we kind of do look at the automotive sales numbers, and it's kind of what we're seeing is a sort of advancement of the timelines from a lot of these OEMs as we come out of this COVID period. Are those the sorts of conversations you're hearing too? Because I know you're looking to. If I want to talk about it in a second about how you finance this thing, but is that the kind of feedback you're getting?
Absolutely, 100%. I think pre-COVID, this whole supply chain issue existed, and I think most OEMs had timelines to go fully electric in the next 5 to 10 years. And what we've been seeing now out of announcements out of the large auto makers in particular is that they're going fully electric in 3 years. And I think in the last 2 years, they've really been focused on their battery metal material, so your cobalt, lithium, graphite, etc. And most recently, Volkswagen announced at their Battery World Day how their plans were progressing for fully electric fairly soon. And so the discussions we're having with those types of organisations is, well, we think we've got the battery metal space sorted. The next critical mineral along the supply chain is really the NdPr in the electric motors, and we're seeing a lot of interest both from customers but also from the equity markets.
So yours is a big project. Nolan's it's a big project, but that comes with a big ticket size, So how much money are you going to need to get this thing moving?
Look, our capital cost is around $1 billion Australian dollars. So it is, as you say, a very big capital issue. And look, that's not a solo project problem. That's the issue that's faced every rare earth producer that wants to go to a rare earth oxide. And so, I don't think we're any different. And the benchmark in our space outside of China is really Lynas Corporation. And so, I think we're comparable in terms of capital costs. that is our hurdle, and that is why the quality of our offtake and the way that we structure our debt is critical in terms of the success of basically executing the project finance.
But capital is one thing. This size and the quantum of it is fine if the economics are fine. Can you remind me what your DFS numbers produced?
Yeah, look, the DFS numbers were based on a much lower spot price. So we had, very healthy NPV and a modest IRR, and that is a reflection of the capital costs. We're actually looking to put out a revised capital and operating costs in the next couple of weeks because our DFS is now almost 2 years old, but also prices have increased significantly in the commodity, and we're sitting at roughly just under $90 US a kilo at the moment. And I think at the time we did the DFS, it was sitting at around $50 a kilo. And most analysts would agree that $65 a kilo is what is needed to bring new producers on stream. So we're looking at a pretty healthy margin there.
Right, so people can do their own math on that one quite simply.
Yeah.
But you'll bring them. You'll look to produce that new DFS when? Soon?
It's not a new DFS. We're just updating it for current capital costs, escalation, etc. over the last few years. We've made a number of changes to our flow sheet, which we've mentioned along the way in various ASX releases, but that has some capital pluses and minuses, but more importantly, it's keeping our OPEX as low as we possibly can, which has always been critical to us to ensure that we can compete on a world scale with any producer that comes on board. And we remain in the lowest quartile there, which is very pleasing. Was
that part of the problem in terms of raising money or talking to people about raising capital over the past couple of years? The fact that IRR was, high teens, right?
Yep.
Was that the issue?
I don't think. Well, the IRR is probably one issue, I think, but the IRR is being driven by pricing of your commodity, and when your commodity price is being influenced artificially, that creates issues, and so it's made it very, very difficult for financiers, bankers and export credit agencies and sovereign wealth funds, etc., to have a clear line of sight of how the commodity price was going to behave, because there was always this perception that China can just switch production on when it needs to. But what we've seen in the last 6 months is that China doesn't necessarily have the capacity to switch it on. There may be pandemic events that interrupt supply chains, but more importantly, China has its own very strong EV and EV component manufacturing ambitions, and so by in the next couple of years, China won't be able to actually export magnets to the rest of the world. They will need it all for their own consumption, and that's why China is actually going around at the moment, or has been over the last few years, buying up other resources globally to continue to feed its requirements.
We talked last time about the China, and we talked about the European ecosystem, EV ecosystems. I mean, who are you having conversations with? Because I think $1 billion is a lot of money for anyone, and usually when companies come on here and say, "Oh, we're going to operate outside the Chinese ecosystem," they end up taking Chinese money because it's easier.
That's right.
Have you got on with your conversations?
Oh, look, I mean, we could have easily had a deal done ages ago with the Chinese, but we think that there's an opportunity here for us to be funded by the rest of the world. And you're seeing responses from governments, particularly through COVID, that they're putting buckets of money towards economic recovery, into the renewables and into the e-mobility sector. And so we've had a range of discussions with both Australian government, European governments, British governments, Asian governments around how can we bring industry together with us such that we can offer security of supply to the key industries that require it within those jurisdictions, but at the same time come with some form of government debt guarantee that enables us then to go out and raise the remaining equity that we need, or go to a commercial bank and raise the debt that we need from a commercial bank.
So how's the Australian government reacting? Because it's taxpayers' money, right? To help a public company and its shareholders. So those must be difficult conversations.
It is difficult conversations, but there's a real drive from the Australian government to address the critical minerals supply chain gap, and they've made numerous public announcements around this. They've allocated billions of dollars into various funds that are being facilitated by Export Finance Australia and Northern Australian Infrastructure Fund. We've got processes running at the moment with those two organisations around potentially accessing concessional lending. We've made no secret of that, and we see that as being a cornerstone that will then allow us to go to European and Asian export credit agencies to bring them into the syndicate to meet the debt requirements. We think the natural flow on from that will be a trigger to the customers that we're potentially talking to, that there's a clear line of sight for financing. Therefore, they're more willing to commit to binding offtake arrangements, whilst at the same time that should bring a significant equity re-rating, such that we can go out and raise the required equity we need, or the equity portion of the project finance.
Right. So that's the sequence of events, but you must be having conversations already with European banks, funders, partners, because given what the macro climate that you've described in terms of OEMs bringing forward their plans for EV production, they must be desperate to secure their pipeline of NdPr.
Absolutely, and that's what I was saying. In recent months, really, there's been a growing awareness from those OEMs, and we're talking with, wind turbine manufacturers. We're talking to the actual OEMs themselves, or the e-motor makers or component makers. And there's a growing awareness that they must secure their supply chain for the future. We're having very advanced discussions with a number of them throughout Europe and Asia, Southeast Asia, and we're getting to the point where we're starting to talk about volumes and pricing now, and so that's a really that'll be one of the catalysts that gets the debt and the equity over the line. But at the same time, everybody's standing back waiting for the first person to make the move. And so we've made it very clear to the Australian government that Australia has a role to play here if it wants to be a global supplier in critical minerals to its key allies. And so that's the key messaging we've been putting to our government. And in turn, I think that they are reacting in a way that it's unusual, as you've identified, for Western governments to pick winners, say, or take a risk in this area. But I think there's a real awareness around the criticality of this material, the national interest side of things, and also security. I mean, I don't like to talk a lot about the defence applications, but there's Australia's got a big order of F-35s, strike fighters with the US, which requires a lot of neodymium magnets in it. It's also got a big order of submarines with the French being built, which also has a large degree of rare earth magnets in it. So it's a national security issue as well, which they are fully aware of and need to address.
So help me understand the sequence of it, because you've outlined a sort of sequence to the financing, which needs the Aussie government to step in and step up to the plate. I get what that means for you, but why does that matter so much to these other European funders in terms of having the Aussie government as part of the syndicate, as it were? Why can't they just get on to it themselves?
Well, they could. They certainly could. And look, we were in quite in-depth discussions with a number of these organisations until such time as the Australian government said, we've now got a critical mineral strategy and we're going to implement it. And so they're saying, well, that's great. We'll let the Australian government or the Australian government bodies do the due diligence, and we'll come in and support it as part of the syndicated package. But we're not going to lead it. We'll let them do all the hard work. And so we're kind of caught betwixt and between at the moment.
Well, that's what it feels like, because waiting for a government to move at glacial speed, which they invariably do, and they don't necessarily have the skill sets in-house to understand what it is they're backing. It's just broad political thematics.
Sure.
Have you got a plan B which doesn't involve the Aussie government and just says, right, okay, we've got to get on with this, guys? Because you'll be sitting here for another 2 years of it, potentially.
Sure. Oh, look, absolutely. It doesn't mean we're not doing anything and we're sitting here waiting for the Aussie government to do something. As you say, governments typically move at glacial speed. So, we're working on a number of other angles, particularly with, potential off-takers and whether they'd like to take strategic positions in the company, but also, continuing to talk with those other foreign ECAs around, look, let's just keep moving on as we were before all of this, and see where it goes. So we're not certainly sitting back waiting for one sort of domino to fall. We'd like it to be the Australian government. We think we can work that angle, but at the same time, there's a number of other pieces in this puzzle that we're sort of juggling with at the moment.
Right, but presumably not as cheap as the Australian government money. Is that balance?
Well, how cheap's cheap? If you get your project up and running, does it really matter? Your shareholders want a return on their long, patient capital that they've put in. And so it's about getting this thing up and running and getting a return to our shareholders. So if it comes at a slightly more expensive cost of debt, then so be it.
Okay. So I'm just trying to work out what you're toying with here, obviously, because like DFS finished 2 years ago, and I think most companies would be having conversations before the DFS, happened, and then when you knew the numbers then, and
Yep.
It's been 2 years. I mean, you're trying to get a deal. The best deal would be great, but get a deal done if that's your mentality. So, what's stopped that from happening then, given the options that you've got on the table? What are you seeking?
It was seriously about 2 years ago that our Prime Minister shook then President Trump's hand in Washington and said, don't worry about critical minerals, Australia will resolve all your problems. And it was sort of at that point in time that, a lot of the other groups we were talking to sort of said, okay, well, we'll see how this plans out. Let the others do the heavy lifting. At the same time, we're very mindful of how governments operate, and so we continue to maintain dialogue with these groups. And 2 years ago, don't forget, the commodity price had been wallowing at around $50 a kilo, and continued to wallow at that price until COVID hit, and inventories disappeared, and suddenly there was a run on commodities, so we saw a bit of a spike in price. But more lately, I guess in the last 6 months, we're actually seeing China not so much concerned about price. They're actually letting price run a bit, and demand is actually driving it, which is, as I said, EV sales in last quarter of last year were pretty strong, particularly in Europe.
So why are people looking at you? We've had a few NdPr projects come on the show. So why are you at the front of the queue?
I think, as far as I'm aware, we're the only NdPr oxide producer that is shovel ready to go. We offer traceability to our customers in terms of how we manage our waste and giving them certainty around where the source of their raw materials come from. And I think, there is limited projects out there that are going all the way through to an oxide that are ready to go. And therefore, I think, investors are looking for what's the next cab off the rank. And we certainly think that's us.
Fantastic. Well, Gavin, stay in touch. Let us know how you get on with these conversations. I think obviously the market's reacted to the macro, but I think we now need to start to see you putting and piecing together how you get $1 billion worth of CapEx financed.
Sure.
So stay in touch.
Yep, shall do. Thanks for having us. But just before we go, I'd like to leave you with a couple of thoughts. The global macro sector is obviously working in our favour. Commodity price, our stock price is recovering, is travelling quite well. These conversations we're having around financing are obviously ongoing. We hope to bring some news to people in the next quarter of this year that's very favourable. But one of the things we are looking to do is perhaps change our execution strategy around heading towards a straight EPC contract, and I think that will give the market even further confidence that this project is really moving ahead. So hope to have some really good news out in the next 6 months.